Welcome back to Golden Rule Radio. I can't stress how important this week is in the markets. A lot of the markets are at crucial levels, and so we have a lot to talk about this week. We're recording the show here on Wednesday, as we always do, but you're going to be listening to it Thursday or later, and we may very easily be talking about something that you're going to know about as soon as you click on this and listen to it. Today, Wednesday, we're at crucial levels with the stock market, with the dollar index, with gold, with silver. A lot to talk about. So let's kick it off with gold. Gold's holding above 1,800 and it's staying there above 1,800. It is clearly bullish, cyclically and secular bull market. Clearly bullish on gold. It is headed higher. Silver is doing very well. It is pushing up against the September highs around $19.80. The dollar index is, again, at a critical level. So where do you want to really dive in first here, Miles?
Well, I think being a metals show, certainly we start with gold. We were talking a little bit before we hit record today, and I think Robert and I are on the same page. Gold's starting to look like we're nearing one of those topping points. Last week, I threw out a 1925 number, which I think is going to be a pretty crucial ceiling. Now, we've still got a ways to go before we would get to something like that. But let's say we had a turnaround in metals here, this 18 and a quarter range that we've been at for a bit. You've got some downside pressure, which on the charts doesn't look like a big deal. But we've had so much up movement without any semblance of a reversal, especially if you take out that March COVID drop. I mean, you could have a really shallow reversal here down to, 1,550, 1,600. We're talking $200, $250 drops, and that's nothing at this point.
And it would stay bullish if it did that.
Extremely bullish.
So we'd like to see that type of move. Don't know that we're going to actually get it, but it would still be a healthy bullish pullback if it did come down to those levels.
Yeah, not just a healthy bullish pullback, but in many instances, you'd say it's necessary for a healthy market going forward, is what you're saying, right? I mean,
absolutely.
We're looking at this as a multi-year cyclical market and secular, right? This isn't something that we can get into microcycles, but for me, I'm looking 2 years down the road from now, and we, in my opinion, desperately need a little bit of a healthy pullback here in order to keep it real and give us all time. Give the investor time to average in, let things work out. You have a few things working against you that way, though, right? We've talked for a month now leading up to quarterly numbers coming out, and here we go. Wells Fargo plunges after first quarterly loss. Citi has bad loan provision surge. So you're starting to get the reality of what's happening. And of course, people are buying gold. We can speak from a subjective standpoint of business picking up. Of course, people are buying gold. So that's what's going to counter that. But from a pure technical standpoint, boy, I sure wish we could honor some of these pullbacks and come down to some support levels.
Well, and there's something we've been preaching for a while, too, and that's the idea that in these macro market cycles, there's a period in there where charts just kind of become irrelevant because you've got that mania phase in the middle and nearing the end of any market drive up or down. The reason we're still talking pullbacks from time to time is because we're hoping. It still looks like we're in the normal phase of a bull market. It doesn't look like we've entered that mania phase yet. Like, say, you did in 2009, 2010, when gold just does nothing but go up, when silver goes from $15 to $50 in 9 months. I mean, we don't want to be there yet because we know there's a lot of people out there who are still looking for opportunities to enter the market. So ultimately, my argument, speaking with my clients, has been with gold at 32 or 3,500 or 5,000, with silver at $50 or $75, are you really going to care about $5 up and down? So I do think it's important to kind of remember the underlying reasons. Let's call them the fundamental reasons why you own things like precious metals. But it doesn't change the fact that if you can easily squeak out better entry points, and ultimately, in a couple of years, we'll be talking about exit points. And if you can squeak those entries out a little bit better, certainly do. But if you don't have a metals position to speak of, I don't see the point in waiting.
No, you don't wait. I had a client ask yesterday, hey, have I missed it here? My next opportunity, gold's now closing consistently above 1,800 an ounce. Yeah, we're 6% away from the all-time high in gold. We're 60% below the all-time high in silver. So let that sink in, right? So if you feel like you've missed the opportunity, then buy silver. it's gold at a 50% discount. So it's like buying gold at $950 an ounce right now if you buy silver and we see the ratio correct. So don't feel like you've missed the boat. Just switch streams a little bit and look at the white metals. So Miles, why don't you go into some of the charts on silver?
Right. So silver we've been watching very, very closely because as Robert opened the show with, we're at a very severe breaking point on silver. In fact, the type of breaking point that we have not seen in about 10 or 15 years, because we're looking at silver's first major potential higher high about 10 cents away now at this point. So I think it's worth pointing out that silver has given no indication whatsoever from a price perspective up until even today that we're recording that it's anything but a bear market. Continues currently right now. If we see some higher highs, and then depending on what the sell-off reversal looks like, we may start arguing bull market in silver. And like Tori said, gold led the charge. Gold started moving up in 2016. Gold is 6% away from its all-time highs, and that all-time high will become the floor. The old ceiling will become the new floor eventually, but silver is a lot farther away from the next ceiling.
Well, and that's what's got the ratio at, what, Robert, 92, right? I mean, we've seen so much price action. First thing we talked about when we all sat down here was, wow, what's silver going to do? And that's affirmed by these charts. Silver wasn't going to capture my attention until we matched the September highs from 2019. So if we exceed that, now my interest is totally peaked. Yes, there's been a lot of volatility in silver. Certainly in March with the drop, silver garnered all of my attention. Ratio at 124 to 1, putting our clients' IRAs and everything into a heavy silver position. So I'm not discounting that. I'm saying from a spot price bull market standpoint, it had to break through this point where we are today before it really deserved to have that bull market label put on it.
Yeah, and I think it needs to be said that it needs to clearly break through
Right.
and hold and
good
continue moving higher, because on the short term, as many of you probably noticed in a lot of charts, not just the metals, but when a market goes to a nominal new high, then it tends to create just a little bit higher high and then go the other direction.
Right, that double top thing.
Right. A lot of the markets have been doing that. So if it does that and it doesn't clearly break out of this previous September high, then it has the potential to pull back some. Same thing with gold, same thing with silver, same thing with the S&P. The S&P has been butting up against today. That previous high looks like it was trying to break out this morning, and it's pulled back up underneath that previous high. So if silver were to go to a nominal new high just barely above the September high, we want to see a clear breakout before we say, okay, all is clear. I think the next stopping point on silver, if it does that, is 21, going back a little bit farther in the charts. But once it gets above 21, it's off to the races, I think. It's going to clearly turn bullish. You talk about 2 years from now. I mean, let's look at 5 months from now, like the end of the year. Where do we think the metals are going to finish? And I would say higher than right now. So longer term, even 5 months is a longer term. You're going to probably be looking at higher prices. So buying today is okay. We'd love to see the pullback, and we hope it happens. We're going to be watching over this next week. I think it's very crucial.
Sure. Well, and the frustrating thing, obviously, about a market transition, like going from bear to bull, is you have to show some consistency, and that takes time. So we can hint that we're having a bullish swing by having a higher high, but you also need a higher low and then probably another higher high. And that's 6 months down the road before we get to the point that we can say absolute guarantee bull market in silver. But the problem is when we put in that second higher high, that price is $28 or $30. So you can't scream buy now bull until we're at least $10 higher than we are now probably. There's nothing wrong with waiting for pullbacks, but my argument is always anytime you sit down at the poker table, you got to be comfortable with either outcome, right? So you're risking buying at 20 with the hope you might get down $14.50. I mean, $14.50 is a reasonable spot price for silver for a 618 fib correction. So you're risking potentially picking up $5 cheaper at the expense of losing having to buy $10 more expensive. And that's the gamble you have to take.
Yeah, and that all sounds great, Miles, to be able to get in at a lower price if there is a pullback, but what is the ratio doing? And again, remember, if it's a storage account or IRA, we talk on the show a lot about our compounding ounce strategies, right, that we pioneered almost 40 years ago. This is something that's another piece of the puzzle. So if somebody's waiting for a pullback to position in their silver and the ratio just went from 97 to 92 in 1 week, what favor did he do himself, right? So that wait didn't pay off. Yes, you're a little bit higher in price now, but more importantly, the ratio moved against you pretty substantially. Now, even when we break below 90, I'm still going to be recommending silver. But anything in the 90s here is gravy. That's just adding 10 points to the ratio and giving you an early exit point by moving from silver to gold in that strategy.
Well, and that's a good point, because logically, what do you think would happen first? Silver going from 20 to 30 or gold going from 1,800 to 2,600? No, 2,700, because that's the same percentage move. So what's more likely to happen? Silver coming from 60% away from its all-time high to 40%.
That's right.
Or gold going to 150% above its all-time high first. Now, I think both of those things happen, but what's more likely? So that's a great point about the ratio, because us seeing 125 on the ratio earlier this year, that's an outlier. That's not the new normal. That's a statistical outlier. Us being at 90 is something that traditionally over the last 40 years has been a high point that we've seen a few times. So either way, silver is screaming buy. It couldn't have said it any louder when it was 120 to 1, but even 90 to 1 is screaming buy now. Who cares what the dollar price is?
That's right.
There's not a whole lot of action on platinum and palladium, so we're going to move over to the dollar and relative to the stock market and what the dollar's doing and what the S&P is doing and NASDAQ.
Everything.
Yeah. So you're saying there is action in the U.S. dollar this week?
There is action. Right now it's testing the previous low support and currently holding just above it. And follow me here. If you've got the dollar holding this little support line on the low side, and then you've got the S&P 500 hitting the ceiling on the high side, then the likely scenario could be the stock market does roll over, sells off, which would boost the dollar. Dollar rallies from here.
Or vice versa.
Yeah,
the dollar rallies, so the S&P pulls down.
Again, we're at this crucial level today.
And with silver, you talked about silver in the same position.
Exactly. So the dollar index is, I think, very crucial. It might not be what's leading the markets. The stock market is at a very crucial point with the NASDAQ kind of having a blow off top a couple days ago. The S&P, again, right there at that ceiling, the previous high. Whichever way this market breaks, I think is going to be a very clear direction for the next few weeks to months. And we're hoping to see maybe a rollover in the stock market, dollar rally, hopefully gold, silver pull back some to give us some better entry points. But the dollar sure is at, this level where it either needs to bounce and rally, or if it breaks down, boy, metals are probably headed higher.
So we're waiting for that first domino to fall, right? The domino effect of people rushing out of liquidity, hoping that they're getting back into a functional stock market. And I think that we're seeing that seesaw back and forth, that domino effect as the U.S. dollar is falling. That's because of people coming back out of treasury bills that they may have rushed into earlier this year and bringing that money back into the equities market. What I do find worth mentioning is when everyone came out of the equities market in February and March, the big crash due to COVID, the dollar was at 99.5. Now that we're nearing those previous levels again with the Dow at 27,000, the NASDAQ looking at breakout potential, the dollar's all the way down at 95.5. So even though we're right back to where we've started, we've lost about 2.5% of purchasing power in the dollar during this whole process. So money can evaporate. The value of money can evaporate when you have these volatile markets, whether it's margin calls or interest rates or just money printing in general. We have, in getting back to where we thought we were on the equities market, lost a pretty significant percentage in purchasing power on the dollar just to get back to where we started.
That's really a key point, and we try to make that consistently on this show, and that is you diversify out of cash. Why sit in cash? Why sit in the dollar, whether it's under your mattress or in your bank account? Because you literally are susceptible to this hidden theft of loss of purchasing power. You can no longer be numb to that because it's going to ramp up. If this doesn't hold and the dollar does roll over, which is something that the president wants, actually, well, then you're going to get absolutely decimated in your cash positions, right? So like last year, $100,000 ended up having $91,000 worth of purchasing power from the first of the year to the end of the year. Well, how many years do you want to absorb that? Yeah, gold was up 18%. Okay, well, your dollar lost 9. That's why. So you become your own bank. You go back onto your own gold standard. You save in a store of value, and it's not a speculative investment. But I'm telling you, the dollar rollover is coming, and we will see the 80s on the dollar index. So before we wrap it up, I just want to say keep your eye on the spending. So as things play out here, obviously there's a ramp up in shutdowns, right, in terms of the COVID response. And as the number of cases climb, well, you're starting to see another second wave or third wave, if you will, of economic negative impact. But watch the spending. That's all I want to say at the close of the show, okay? The economic picture is bleak. They know it. They know that it's going to hit Main Street even harder. Kudlow is saying, look, there's going to be a fourth round, an additional package of stimulus, and they're going to try to make it targeted, right? They want to incentivize not just going back to work, but they want to incentivize investments too. So what is that going to look like? And on top of that, they're talking about this infrastructure spending package that's been out there, and they've already started to speed up construction projects now, and they're making it easier from an environmental impact to get things passed through. So they're going to really try to speed that up. But what I'm saying is, again, no debt ceiling, no spending limits. Watch what they're doing. They're going to try to make you numb and comfortable with money in your pocket, but all that means weaker dollar, which circles back to earlier in the show. So that's it for this week. We really appreciate you joining us again.
As always, if you liked what you heard, hit the subscribe button, ring the bell, engage with us in the comments if you have any questions or something you want us to discuss on a show. You can find more info off our Twitter page at ICA Gold, Facebook, McAlvany Financial, or if you'd like to speak with one of our advisors to discuss your personal portfolio in precious metals, you can give us a call anytime at 800-525-9556. Thanks for listening. Have a great week.